All right, guys. Good morning. Good morning. Or good afternoon, I should say. Let me know how the stream is. We should be pretty solid. Let me pull this up. But the stream should be running pretty nice, pretty crisp. Let me know if the volume's good. I did mess with the settings a lot. I bought a new mic for. I'll probably bring this mic home. I think it's actually a little bit better than my other mic. Gonna take a look at the NVIDIA chart. See the NASDAQ here on the right side. NVIDIA sitting at 162.80s right now, 162.80s. Watching the market as we speak. Sounds pretty clean. Audio's good. Good. All right, let me get some music up. You also shouldn't be able to hear much of the background noise. I kind of played with my settings a little. Today we got the FOMC Minutes report, a huge report. Going live in about 40 minutes. We'll put a timer up on screen so you can hear me well. Today's FOMC Minutes report drops live here at 2 p.m. Eastern Standard Time. Subscribe to chat. Look at NVIDIA, guys. NVIDIA up to 163, hit highs of the day at the opening bell today at 164.40s. I'm going to turn my music down a little bit, but we should be pretty clean. Let me know if we need to do anything here. Yeah, I told you guys I'd go get a new mic. That old mic just didn't cut it anymore. I'll probably bring this one home. It's a nice mic too. This one's a good one. Sound should be pretty solid. I also have it set to where it can't pick up any background noise. All right, so just to talk about some of the stories for today's FOMC Minutes report, there's been a split among policymakers on what to look for regarding rates. Some, specifically Christopher Waller and Michelle Bowman, signal openness to a rate cut as early as the July 30th meeting, but tariffs are still driving inflation uncertainty. The minutes are expected to show debate around how U.S. tariffs, including threats for August 1st, might feed into this inflation problem today, whether only a temporary jolt or something more persistent. UBS now thinks in-year PCE inflation is going to close at around 3.4%, which is higher than it is now, complicating the policy calculus. September is still the most likely time for a rate cut. Market positioning currently discounts a July cut of pretty low percentage odds. It's like under 5%, but sees roughly a 60 to 65% chance or more of a September rate cut. Jerome Powell's statements ahead of the release suggested that rate cuts could come later this year if inflation from tariffs proves temporary, but he's still like doing a wait and see approach. The June dot plot showed a narrow 10-9 majority favoring two cuts in 25. The minutes reveal what data or triggers could sway that view. The updated projections from June showed lower GDP forecasts and slightly higher unemployment and core inflation, reinforcing the Fed's flexible stance. Goldman Sachs anticipates additional details around the Fed's shift from flexible average inflation targeting back toward traditional flexible inflation targeting while retaining a makeup strategy for zero lower bound risks. And traders and bonds are currently torn, as is most people in the chat I see, on what they want to do, whether they want a rate cut in July or September, whether they think it's justified in cutting rates last meeting and, a couple Wednesdays ago. Morgan Stanley also warns investors may be disappointed by a lack of cuts due to persistent inflation and job growth. Bank of America set a scenario where a weakening labor market by late summer could force a rapid easing cycle of 75 basis point cuts in September and beyond. And so that's kind of where we're sitting now. We'll do a poll here. Yeah. Appreciate the love. We're here. We're streaming. The president is also speaking right now, I think, where they're talking about foreign policy and other stuff. And we'll see what today's FOMC minutes shows. We don't have an FOMC meeting today, but we have the meeting minutes, and that's today. So remember, FOMC minutes is just a detailed breakdown of what happened to the last Fed meeting, but we're going to break it all down as we usually do. What's up, Tiny, Faye, Cab, Kay, Nathan? We should see some reaction. Yeah, but let me get a timer up. We're pretty smooth running here. We also have some breaking news. So the president announced 20% tariff on Philippines, separate from all sectoral tariffs. Goods trends shipped to evade a higher tariff will be subject to that higher tariff. He also announced 25% tariff on Moldova, 30% tariff on Algeria, 30% tariff on Iraq, and 30% on Libya, 25% tariff on Brunei. Here's a pretty good timer right here. Oprah out here handing out tariffs. Yeah, I mean. Interesting. Let's see if we get back up there. We broke all-time highs in NVIDIA specifically. NASDAQ broke all-time highs for a split second. The SPY did not, though. So the S&P did not break all-time highs, but the NASDAQ and NVIDIA stock did earlier this morning at the opening bell. Honestly, it's really not that difficult managing it. Like honestly, about 5 years ago, it would have been really difficult. I would have to pack monitors and all these different things to be able to stream while I'm on vacation, like actual heavy monitors. Now it's not really like that. Like my laptop's very small that I use to run the stream. They now have like Asus ZenBooks, which are external monitors that are very thin, very easy to pack. They come with their own little stands, and so you can just get a couple, little mini external monitors from Asus, and they do it well. They run well. So. All right, so what you want to listen for in the minutes is language reflecting changes in the internal balance. Are more voices tilting towards cuts? Is there a specific threshold or economic indicator driving, sustained price pressure, stuff like that? You want to listen to framework review, especially the shift between FIT and FAIT, and with makeup provisions, whether the outlook continues to favor a September cut or keeps markets leaning towards later this year. So a lot of people looking at the Fed Minutes report to shine light on the divide over tariffs and rates. And so that's what we're covering today. So we'll see what that looks like. I'm excited for it. Let's see what we got. Yeah, today's going to be a detailed breakdown of what the Fed looks at during the FOMC minutes, or today's going to be a detailed breakdown of why the Fed chose to make the decision that they did in the last meeting. We'll have updated stats on who voted for what, why they voted for what, if there was any torn information. And again, what you want to pay for, so it's a 12-page document that goes live right at 2 p.m. in about 32 minutes. That's going to detail everything. So again, there was split among policymakers on rates. Christopher Waller, Michelle Bowman, they said they were basically open to a rate cut this month in July. A lot of the other Fed members and voters remain cautious. 7 officials projecting no rate cuts in 2025. Again, the minutes are expected to show debate around how U.S. tariffs, including threats for August, might feed into inflation, and whether only a temporary jolt or something more persistent to inflation is here. UBS now thinks PCE year-end inflation is going to be 3.4%, which is higher than it is now. Let's listen for things about a July cut, like positioning for a July cut potential. 65% chance of a September cut as of now. And then there's also the FIT versus FAIT, refers to 2 different approaches by the Fed uses for setting monetary policy, specifically regarding inflation targeting. FIT is flexible inflation targeting, which is like the transitional approach most central banks have used since early 2000s, 2% target going forward, not trying to make up for past misses. It's flexible because the Fed also considers employment and financial stability. It does not compensate for prior inflation or overshoots. It allows some tolerance around 2%, but stays forward-looking in an emphasis on stability and predictability. FAIT, which is flexible average inflation targeting, is a post-2020 strategy adopted after years of inflation running below 2%. The Fed aims for inflation to average 2% over time, meaning it would allow inflation to run above 2% temporarily to make up for prior shortfalls. So basically, like, they average it instead. So instead of flexible inflation targeting, it's the flexible average inflation targeting. So they look backwards and forwards, considering past inflation undershoots, implying a more patient stance on rates. And so we'll see if they talk anything about that there. And since inflation spiked post-pandemic, critics are arguing that the average FAIT contributed to the Fed being too slow to raise rates in 2021 and 2022. So many suggest the Fed may pivot back to FIT, which doesn't average it and instead just kind of looks at the future, focusing on future inflation only, especially now that inflation has been above target. So hope that makes sense. Let's do a poll here. All right, well, today's FOMC Minutes report calls bullish or bearish market action. The poll is now live. You see this new mic I got, man? This new mic, it's honestly pretty solid. You know, as soon as they cut, the admin is going to write back to wasting cash on stuff nobody likes. Yeah, maybe. I don't know. All right, guys, we got about 30 minutes into the FOMC Minutes report. About 30 minutes. Do me a favor, hit the like button if you haven't already. Hit the subscribe button here. We appreciate it. Yeah, new mic is really nice, honestly. This type of mic just came out, so it's actually a better mic than I have at home, and an easier one to manage, you know. So we're gonna keep it. We'll bring it home with us and use it. All right, guys, FOMC Minutes report, 30 minutes. Bro, I listen to you all day long. You make my 7-5 job go easier. Hey, that's what I'm here for, brother. You can stay educated on markets while working, you know. I think a lot of people probably just listen to the audio of my stream, but that's all right. All right, we're at 622. NASDAQ at 22,977. NVIDIA at 162.80s here. Still pretty close to all-time highs, but not quite there yet. You can see how much, here's the all-time high on the NASDAQ. We have dumped all the way back down here. So we, somebody was trying to make fun of me for saying a lot of the time we break all-time highs and then just dump back down. And I think the NASDAQ here is a prime example. The previous all-time high on the NASDAQ was right here at 2304, something like this. And so it did exactly what I said it would. It went up to these all-time high levels and then just dumped down. Very common movement pattern. What we got this morning in pre-market was less common in terms of NVIDIA, because NVIDIA broke all-time highs up here and then just ripped up for a long time. So that's a less common pattern. Most of the time it looks like this. Super isolated high up there, comes right back down. And then it makes when we get closer to this even more interesting too, I think. UPS driver here delivering and listening. Hey, thanks, brother. Appreciate you guys. I listen to your updates as I trade, as well as watch toss. It just helps all the information in the moment. Yeah, for sure. I appreciate the support. Slap that like button if you haven't already. All right, guys, we got 25 minutes. Got about 400 here already. We'll have thousands when the FOMC Minutes report drops. So, yeah, Mitch will be coming on stream tomorrow too. And so, this new mic I got is beautiful though. But yeah, FOMC Minutes. And again, just to give you guys some understanding about the Federal Reserve and what it does and why we watch the Fed. So the Fed's job is to stay balanced. They're looking at, they have a dual mandate, and the dual mandate is basically to have a good economy with low inflation. They might phrase it in different ways. They might say a strong labor market, or price stability, or whatever you want to call it. Ultimately, they want a thriving economy and low inflation, right? But those two things can, I'm not saying they always do, but they can contradict each other. Sometimes the more thriving the economy, the worse inflation you get. And so they need a reasonable level for each of those things. If the economy is too strong, inflation can get really bad. If inflation's too low, it means the economy could be weak. And so it's a middle ground. That's why they target 2%. And the Fed can control these things in a number of different ways. Some are more desperate than others. One of the more desperate ways, first of all, the Fed wants to bring interest rates down if the economy's struggling. It's a type of economic stimulus. You bring interest rates down, businesses and people have cheaper access to loans, and businesses can thus expand and hire more people, and it improves the labor market, and people can get more loans and buy more things, and that improves spending in the economy. On the other end of that, though, if both of those things are too strong or we get too much economic stimulus, the Fed can raise rates and restrict the economy to try to push it back down, restrict spending, slow the labor market down a little bit so prices don't keep rising and rising and rising. More desperate ways to do this are called quantitative easing or quantitative tightening. Quantitative easing is a form of money printing in which the Fed basically creates money through online reserves and then uses that online money to buy up bonds and other financial assets like MBSs, like mortgage-backed securities. This injects liquidity into those markets and allows the rates to come down faster, essentially. But this can cause inflation problems, and it's a more desperate decision. Like we did this in 2020, we did this in 2008, and then the Fed, when inflation spiked up after 2020, the Fed is now still doing some quantitative tightening. Specifically, I think they're still doing 100% in MBSs, and they reduced it by 80% a couple meetings ago, but they're still doing some tightening, which is restrictive, meaning they're still trying to combat inflation through a tightening cycle here. And so, yeah, that's basically what we're looking at. The last meeting, the Federal Reserve paused rates. They've been pausing since December of last year. It's been, the last time the Fed cut rates was December, and in the last quarter of 2024, the Fed cut rates 100 basis points, which is a 1 full percentage point cut. Basis points are percentages or decimals of percent is a basis point in this context. And so they did 50 basis point cut in September, 25 in November, 25 in December. Full percentage point cut. And then they've been pausing now. But of course, the big news that we've seen recently is that the president is pressuring Powell to cut now. And I think it could go both ways. I've said this many times. I'm very neutral politically. I think you probably could argue a small 25 basis point cut the last meeting. I think you could probably argue one for July, but I also understand the Federal Reserve wanting to wait and not spike inflation if we can avoid it, depending on how strong the labor market and the economy is. And we've seen some weakness in the economy in negative 0.5 GDP that we saw in the last GDP report for Q1 of this year. And then we've also seen some strength in the economy. Non-farm payrolls last Friday showed decently stronger than expected economy and lower unemployment. And so we're getting mixed signals here so far. The Fed is kind of playing a wait and see approach. They don't want to cut yet. Most likely they're going to cut in September. But that's where monetary policy and economics are right now for this country. And again, we'll see what happens. Yeah, we can look at Bitcoin. There's Bitcoin. Bitcoin looked like it might make a test of all-time highs, but then it kind of settled down a little bit with everything else. Yeah, and remember, the Federal Reserve and you know, everything else is independent bodies. They're two independent government bodies. I work in talent acquisition, and the labor market is really quietly doing layoffs, lengthy interview processes that lead to a hold in unresponsive hiring managers. It's tough. Yeah, for sure. But honestly, all resumes are still reviewed by humans. Yeah, I mean, I don't think AI is going to take it up. You know, I think that'll be a little while. I think that's an area where they're going to get the most heat and backfire from. And so I think they're going to wait to implement stuff like that where AI starts deciphering resumes. All right, 20 minutes here, chat. 20 minutes. Sometimes they do, yeah. Hey, and again, do me a favor. Hit the like button. Hit the subscribe button. Pump the stream up. We appreciate it. And again, we're going to cover Fed minutes as soon as it drops. We're going to cover what's in the report. We're going to break it all down with AI, and then we're going to watch the volatility and cover that as well here. So yeah, and I'm reading this report by Reuters that said the Fed minutes is likely to shine light on the divide over tariffs and rate outlook. So minutes of the June 18th meeting to be released at 2 p.m. Projections at the meeting showed split over coming cuts and that the president's tariff policy remains unsettled by the FOMC. They're expected today, again, they're expected to show a divide. Still wrestling with economic impact of rising U.S. import taxes and reluctant to commit to interest rate cuts until it's clear how much the president's tariffs increases will add to inflation. Again, Waller and Bowman, both appointed by the president during his term, have said they consider cutting the benchmark policy rate as soon as the central bank's July 30th meeting, which is this month, in a couple weeks. It should indicate whether other policymakers shared this view, that the impact of tariffs will likely be short-lived, or whether they see the tariff outlook for inflation is going to be longer. What underpinned the outlook of 7 Fed officials who don't see, any rate cuts this year in 2025 is going to be an interesting look to see what they said. Again, last month the Fed paused rates at the 4.25% to 4.5% range that it has maintained since December. Again, they issued 3 weeks after each meeting. The minutes are always backward-looking, but can cast a light on the debate that's being held between when and how much we should cut rates. And that's the big story of today. So, also, the next threat to impose levies comes August 1st. He says he's not pushing them back anymore. On many countries, including 25% imports from major trading partners like Japan and South Korea. The Minutes is going to add, a lot of information about the talks on when the president was publicly calling on the central banks for deeper interest rate cuts, even though the incoming data and survey results were laced with evidence of both higher prices and slower job growth ahead. So it's kind of a dilemma here, if that makes sense, but for the Fed. We can take a look at the PCE graph. Just to give you guys a look at this. So here's core PCE. See if we can find here's a 5-year graph. It's a chain graph. I don't like it. Let me find a better one. All right, so the last here is the graph from the last release for PCE inflation that came out late last month. You see changes in monthly consumer spending for May, percent change in PCE price indexes from month 1 year ago. Yeah, I think PCE inflation is still high. It's definitely higher. I think next week we get CPI inflation, so that might be an easier graph to look at because CPI they're similar, and you can kind of see like 2020 we had all that economic stimulus, we spike up in inflation because of like the need to save us from the 2020 economy crashing. So they did all this economic stimulus, and what happened? You can see this price graph just increase for inflation, and CPI inflation got up to over 9%. PCE inflation didn't quite get that high, but a lot of people look at CPI versus PCE. The Fed looks at core PCE specifically, which excludes food and energy because they're a little volatile. But like if you look at food prices, you can see how volatile food prices are. Food prices increased in September of 2022. It was on the year, it was 11.2%. So you can see how high food prices got in that period of time. You can also look at like gas and see the price that everybody knows gas spiked in that period of time. Electricity is one that we're still dealing with. It's still ridiculous. It's settled down some too, but my energy bill is ridiculous. Yeah, they affect the market. FOMC minutes will affect the market in some way. In some way. I don't know how, but... Kodak price is what you pay, value is what you get. Letter to shareholders, 2008, Warren Buffett. Study in April found that ChatGPT failed at 91% of basic intern level office tasks. Yeah, I mean, it'll get better though. ATS systems have a knockout questions. Yeah, I believe that. All right, guys. Is there Jerome Powell resigning stuff going on right now? All right, here we go, guys. We got what, 11 minutes left. Hit that like button, hit that subscribe button. We appreciate it. We're getting very close to this. Again, we got the FOMC Minutes report going live very soon. Stick around. What do I pay on average per month for electricity? I would say an average is about 700 for me. 600 or 700 is about average. Yeah, we got the FOMC Minutes report going live very soon here, very soon. I'm curious to see how it's going to affect the market here. We are in the middle of the biggest travel day, or biggest travel few weeks of the summer, being in the middle of July. But the FOMC Minutes report is going live soon. Be ready. Next week, we got CPI inflation. Tomorrow, we got jobless claims, unemployment. So it's been a slow couple day period, but we got a lot more stuff coming out now, which is good. We'll see how it goes, how it looks. No, it's not cheap. No, I'm genuinely paying $600-700 a month in electricity, and it's gone up a lot over the last few years. I mean, I'm in a pretty big house, but it's a lot. It's not cheap. I'll put it that way. You know. All right, guys. FOMC minutes. SPY pushing up to 622. NASDAQ up to 22,980s, almost 23K. That's a really big milestone level. I think you got to look at 23,000 right here. I think 23,000 is a pretty big spot that you want to watch. So. I don't know what the dollar is going to do. It depends on what economic policy looks like. It looks like it depends on what the outlook is going to be for economic policy. If we take a look at like the CME watch tool, it's still looking pretty probable we are not going to cut rates this month. Like as of now, we're at 6.7% likelihood of a 25 basis point cut this month. But that's not a very high chance, you know, and this might change. We do have CPI inflation prior to the next meeting here. So we do have CPI inflation prior to the next meeting that might influence things. But it's not looking very probable for rate cuts this month. Still 93% likelihood of a pause this month. So we'll see. Still got time, but again, we'll see. It will take a little bit. September is still looking pretty probable for cuts. And we're going to watch yields as well. 64% likelihood of a 25 basis point cut by September. 31% likelihood of another pause in September, though. So that's an interesting stat. Yeah, they can certainly change on a dime. 100%. Absolutely, they can. We'll see if they do, though. The only way they're going to change is if we get worse inflation data. We get worse data for inflation, it's going to push back odds of rate cuts. If we get better inflation data, like low inflation, anywhere around 2%, lower than expected, lower month-to-month reading for CPI, PCE inflation this month, that's going to increase the odds of a cut because it's going to make it more justifiable, as well as if we get weaker economic reports, like weaker GDP, weaker payrolls, you know, stuff like that. That's a situation in which we might get increased odds of a cut. But it's still very much up in the air. We really do not know what we're going to get here, and it's something you just got to be really careful and understand. Like, we have no idea what we're going to get here. We have no idea what the market's going to look like, and we just got to wait for the data. And that's why, like, tomorrow's jobless claims report I think is really interesting, and then Friday I don't know if we have much Friday, but next week we got CPI inflation, which is massive. Yeah, so we'll see. We'll see, guys. And we're going to digest this whole report. Again, this is a big report. It's still looking very improbable that we're going to cut rates in July. And we're going to stream this whole meeting live. By October this year, it looks like we got a 44% chance of a 25 basis point cut, 41% chance of 50 cut by October, and a 2.7% chance of 75 cut by October. Still the largest, 12% is what I'm seeing out, and still a pause by October of this year. And that would fit in with the Fed members that think we're not going to cut it all in 2025. I don't know if that's happening, but that's kind of what you want to fit in for here, I think. And yeah, we'll see what we get. All right, guys, 44%, 25 basis point cut. All right, here we go. Still got a couple minutes left, guys. We still got time. But the new mic sounds good, right? I think the new mic sounds good. It should do us well. What 3 charts do you guys want to have up? Let me know in chat right now. Would you rather the SPY, NASDAQ, and Bitcoin like we got right now? I think that's a pretty good one. We could also throw gold up if you want, but we got SPY, Bitcoin, NASDAQ futures contract up right now. Big drop happened today. Let's see if the Fed can do some magic and get us back to all-time highs. Quick update trade I posted 2 weeks ago in chat. Garbage stocks bought 3 times, bought the dip, up 15 per entry profit. Intel is up 8% today. Again, it can go to 0. Yeah, good luck, brother. Next month inflation will hit 8 months in a row. Maybe. Upward move for the dollar. Yes, it's potential. Will a pause cause an upward move? Probably not. I think the market wants rate cuts, to be honest. I think the market would prefer rate cuts, in all honesty here. But you never really know. All right, guys, we got a couple minutes left until their minutes report drops. A couple minutes left. No, so Jerome Powell does not speak today. This is a 12-page document that drops live at 2 p.m. Eastern Standard Time that gives some foresight into what they did the last meeting, why they did it, what they voted for, which Fed members wanted what in terms of rate cuts, and more. And it's a document that we're going to use AI to decipher and break down live on stream every single time. All right, guys, get ready. All right, guys, we got less than 3 minutes here. We got over 1,000 people. Sorry, I'm just prepping AI to break this down. Hey, thank you, Crypto AK. What is FOMC? FOMC is the Federal Open Market Committee. Gold bullish or bearish? Gold, SPY, and NASDAQ? Maybe. Yeah, NASDAQ, dollar, and gold. I think some people want gold. I'll put gold up. There's gold on the right. We got the NASDAQ 100 futures in the middle, gold on the right, and then Bitcoin on the left. I think it's a pretty good split. All right, 2 minutes here, chat. Here we go. Yeah, we still got 2 minutes left though, so. All right, chat, get ready. All right, so this timer's a tad bit early. Okay, a tad bit early. All right, so this is from all right, we got less than a minute. Be ready. Last one was on June 18th. All right, 15 seconds here, chat. Ten, 9. Yeah, we got about 5 seconds. We're going to break it all down, exactly what happened. We're going to watch the market reaction, and we're going to see what happens here. And here's the report. The report is now live now. Watch for market movement. All right, so the market hasn't really responded much, but give me a second. We're going to be breaking it all down. All right, most saw risks of tariff impact on inflation. The Fed Minutes report, majority saw slower economic growth going forward, and many expected gradual softening in labor conditions. The Fed Minutes said a couple were open to rate reductions at the next meeting, is what's going on. So that's what's happening now. We do have the minutes here today. Okay, so again, we're going to break all this down. We're going to put what the Fed did first. Like, we're going to put what members wanted what and everything else in bullet point style. So bear with me, but we're going to post this right now. And yeah, so outlook is the first thing we're going to look at. Most participants expected some reduction in the federal funds rate in 2025, so that's good. Temporary or modest upward inflation from tariffs anchored long-term inflation expectations and potential weakening in economic activity and labor market conditions. A couple of participants would be open to a rate cut as soon as the next meeting if data aligns with their expectations, but most participants favored no rate cuts this year, arguing inflation is still exceeding 2% target and short-term inflation expectations remain elevated. The economy still remains resilient though, and risks to inflation and employment have diminished but remained elevated. The tariff impact on inflation and growth are uncertain. Could be delayed due to inventories or pricing strategies. The effects could be stronger if supply chains are disrupted, and longer run monetary policy remains data dependent, but the current stance seems seen as well positioned for timely adjustment. So in the staff economic outlook, GDP outlook upgraded for 2025 and 2027 due to lower expected tariff rates. Labor market expected to stay strong, but unemployment they think is going to rise slightly. Inflation projected lower overall, seen at 2% by the 2027 year, and recession risk is downgraded, but there's still risk to GDP, still tilted to the downside. The inflation risks still remain to the upside due to persistence of tariff impact. Though, and growth, the participants' economic assessment were as follows. Growth was solid, unemployment low, but inflation still over 2%. Consumer and business sentiment weakened, though slightly improving, and services inflation was moderating with goods inflation increasing. The tariff effect on inflation could vary based on pricing behavior and supply chains, and businesses may pass on costs only when inventories deplete. Labor market was solid, but signs of slowing hiring and cautious investment. Wage growth was moderating, but not expected to drive inflation, and tariff and geopolitical risks still a factor for price pressures. In the staff's review of the economic situation here, guys, core PCE inflation was seen at 2.6% in May, down from earlier in the year. Unemployment was at 4.2%. GDP growth rebounded in quarter two after a slight quarter one decline. And business investment was still strong, bolstered by early tariff avoidance. Trade volatility persisted amid shifting U.S.-China tariffs, and consumer spending was still solid. Foreign growth slowed. Inflation was up in Mexico and down in China. Market expectations now imply 2 rate cuts by the end of 2026. Short-term treasury yields rose. Longer yields reflect fiscal concerns. All right, we're going to give you some more information here, but we're still breaking everything down here, chat. So bear with me. We're still breaking everything down. All right, guys. So we're having AI break it down a little bit more detailed. But again, as of now, the main points from this is that most saw some reduction in the Fed funds rate this year as appropriate. So they still think we're going to at least cut once this year, which is appropriate. A couple said they would be open to considering a cut as soon as the July meeting if data evolved as expected. I'm assuming those are Bowman and what was the other one? I'm sure that was Bowman and whichever other one there was. All right, so as of the June 2025 meeting, the Fed participants maintained the target range from the Fed funds rate. Now rewritten, as of the June 2025 FOMC meeting, participants showed a growing inclination toward reducing interest rates in the near term. Most members anticipated at least 1 rate cut before the year end. This was driven by expectations that inflationary impact of recent tariffs would likely be temporary or limited, with long-term inflation expectations remaining anchored. Additionally, concerns over moderating economic activity and labor market softening supported the case for easing. Hey, bro, just close the door and go over there, okay? I love you. Close the door. Go over there. Here. Okay, that's fine. Just go. I love you. Thank you, buddy. Sorry, my son's in here. I love you. Now get out of here. Committee was not unified, though. Some participants remained against any cuts in 2025, citing persistently elevated inflation, still above the 2% target, and the strength of recent economic data, especially regarding the resilience of consumer spending in the labor market. These members highlighted that the risks that high short-term inflation expectations could become entrenched if tariffs prove more persistent or are followed by new geopolitical pressures. One of the symbols I'm curious to look at is 10-year treasury yields. 10-year treasury yields per this meeting are down. So they have decreased, which interest rates and treasury yields tend to follow each other. So they have decreased with each other. On balance, the majority lean towards a cautious, dovish stance, indicating that the Fed is well positioned to wait for further clarity on inflation, depending on what happens essentially with the tariffs. In terms of outlook, the Fed's staff upgraded GDP for 25 through 27 due to revised assumptions about tariffs. Tariffs are basically what's impacting everything, but previously the staff had projected higher effective tariff rates, but following policy shifts, deals with China, they are now anticipating lower trade barriers than before, and so they're a little bit more optimistic regarding inflation. However, despite this brighter near-term economic view, the staff still expects unemployment to rise slightly over the next year, however, hovering above their estimate of its natural rate through 2027. The outlook for inflation is slightly more optimistic. Staff project PCE to gradually decline to 2% by 2027. And even though tariffs are still expected to produce modest price increases this year in 26, the primary inflation concerns remains the risk of persistence should the tariff-related price pressures last longer than anticipated or spill over to the broader supply chains. Importantly, while recession risks have been downgraded compared to the May projection, risks to GDP growth are still viewed as skewed to the downside, and inflation risk remains skewed to the upside. And in terms of the participants' economic assessments for each of them, like what they wanted here, they broadly agree that the economy has continued to grow at a solid pace. Unemployment's still good. Despite this, participants acknowledged inflation remains elevated, recent declines being uneven and not yet fully reassuring. Services inflation showed moderations. Goods inflation was rising, probably due to tariffs, and shifting supply dynamics also pointed to that. Labor conditions were mixed. The economy was mixed. Labor market was strong. Several participants noted early signs of caution, such as slowing hiring, business hesitation on investment, and anecdotal reports of paused recruitment due to policy uncertainty. This is kind of what Faye was talking about. The NASDAQ is honestly reacting good to this, though. It is moving up. It's over 23,000. It's getting closer and closer to all-time highs. Yeah, I don't know, guys. I just bought this mic, okay? I just bought this mic. I don't know how to turn the color off. It was the best mic I could get at Best Buy. Genuinely no idea how to turn the color off. There's got to be some way. It's not that I wanted a rainbow mic, okay? This is just what they had. It was the better mic. I'm not going to buy a worse mic just because this one's rainbow, okay? How dare you? EU is going to come Asian time zone, maybe, brother. Thank you, Faye. I appreciate it, I guess. Y'all are funny, though. All right. Again, NASDAQ up there. It's at 23,000. Yeah, I have no idea how to turn this rainbow off. No idea. 23,000 for the NASDAQ. 23,000 is actually a big level. So essentially what we saw in today's FOMC Minutes report is we saw signs of apprehension, a little bit more optimistic towards rate cuts because of trade deals, is what it said. So essentially, the Federal Reserve is a little bit more optimistic regarding inflation, which bumps up the odds of rate cuts slightly relative to the previous meeting. Because if you remember, the previous meeting prior to this last one, people were really worried, pessimistic because of the tariffs. Like, that's right when tariffs had kind of kicked off, market was down, people are panicking, worrying. And I think now with updated trade deals with China and others, I think the Federal Reserve is a little bit more optimistic regarding inflation. And so in that regard, it's a little bit more probable that we're going to cut sometime this year. Yeah. No, it's just my son. That's my son. He's a good kid. Yeah. Sometimes you got to be like, hey, I love you, but get the heck out of here, bro. You know? And he understands. He's like, okay. All right. He's got it. 23,000 still pushing up. No, there's no Fed meeting. There's no Fed meeting. This is a detailed breakdown of what the Fed did and said during their last meeting. And again, we'll go over it again. Previously, the staff projected higher inflation or high effective tariff rates is the story of this Fed Minutes report. Again, this shift improved the real growth forecast since we got a lot of trade deals done in between, not last meeting, but the meeting before last to last meeting. We got some trade deals done. That made it more optimistic for the Federal Reserve to be dovish. So a slightly more dovish outlook than what happened previously. Slightly more dovish outlook. And again, we got a full breakdown as well. I'll go over my quick view. I got a couple different ones. So again, basically what happened here. Most participants expected some reduction in the Fed funds rate this year in 2025. And look at the 10-year yields continue to fall down. These follow interest rates. Just so if you want to understand some correlations, watch what yields do. Yields are dumping down right now. They're at 4.34%. This morning they were at 4.42% or something like that. They're now all the way back down to 4.34%. Yields and interest rates follow each other. So what this means is that bond prices are going down and yields are going up. People are more optimistic regarding the NASDAQ and the economy and riskier assets like stocks. And so bonds get sold off and yields spike. It's also a more optimistic look towards rate cuts as well, though. So yields and interest rates follow each other. And so if yields are going down, interest rates are having a higher sentiment, like a more restrictive sentiment. If yields are going down, that means interest rates have a lower sentiment. I might have said that backwards. If yields go up, that means interest rates are probably going to be higher. If yields go down, that means interest rates are probably going to be lower. And that's what we see now. As we see yields come down, currently 4.34% for the 10-year Treasury yield. So interesting. But again, temporary or modest upward inflation from tariffs is what they think. Anchored long-term inflation expectations, weakening in economic activity and labor market conditions. And a couple of participants would be open to a rate cut as soon as the next meeting if the data aligned with their expectations. Some participants favor no rate cuts this year, arguing inflation still exceeds 2%. Short-term inflation expectations are elevated and the economy remains resilient. But the risk to inflation and employment have diminished but still remained elevated because of some trade deals that happened. And the tariff impact on inflation and growth are uncertain, could be delayed due to inventories or pricing, and effects could be stronger if supply chain disruptions happen. Longer run monetary policy remains stable and data dependent though, but the current stance is seen as well positioned for timely adjustments. They think GDP outlook upgraded for 25 and 27 through 27 due to lower expected tariff rates. So that's what we got right now. Can we still use yield inversion and post-2008 levels to find a crisis? Well, yeah, you can still use yield inversion. But it's not a perfect thing. You know, you can still use it, but it's not perfect. Yeah, I mean, the market's up a little bit from this news. It didn't really move too much from it, but it's up some. It's crazy how people are happy when the market moves. Yeah, I mean, that's how it goes. So again, guys, there's no FOMC today. Today is a reaction to the previous meeting called the FOMC Minutes report. It's a 12-page document that releases every 3 weeks that details why the Fed chose to make the decision that they did in the previous FOMC meeting. This one is from June 18th. Today's FOMC Minutes report covered the June 18th meeting, and we talked about what they saw, what they did, what the updates were, and all that good stuff. All right, I'm going to pause this. Yeah, we can take a look at Bitcoin too to see how Bitcoin responded to this here. Bitcoin spiked up a little bit on this report as well. Hopefully you guys like my new mic. It's pretty solid, I think. And let's take a look at the rate odds here. That's one of the things that I really want to look at is the rate expectations. So I don't think these have changed yet for this meeting. Yeah, these haven't changed. We still have 6.7% likelihood of a we still have a 6.7% likelihood of a cut this month in July on July 30th and 93% likelihood of a pause on July 30th. So still very improbable that we're going to cut rates this month, unfortunately, for a lot of people. NASDAQ pulling back to 23,000 here. Let's see if it holds, but it's trying. Yeah, I'll give you a link to the document if you guys want it. Oh, you can find it in the description. Just look in the description. I use an HTML file, but you can find it in the description. Here, it's right here. I'll help you. It's a 12-page document. I just gave you guys the cliff notes. Here you go. Yeah, there you go. Use the opacity or brightness slider, drag it all the way to 0%. Where, bro? Yeah, I have no idea how to do this. What's up, Eliza, and whatever, no offense, but what's up, Eliza? I appreciate the becoming a member. Thanks so much. I don't have a software. I didn't download the software for this thing. Yeah, I didn't download the software, sorry. Gold's still shooting up here, though. No, in OBS, you're not going to be able to control the color of your microphone RGB settings. No, Powell doesn't speak today. Today is just the FOMC Minutes report. It's a detailed breakdown of why the Fed made the decision they did in the last meeting. Essentially what today's report is. Yeah, it says I have to download the software. Boo. Yeah, I have to download the software. It's alright. I'll download it right now. All right, so we're still testing 23,000 here, guys. I really want to see if we, you know, and again, I'm look at Bitcoin. Bitcoin almost up to 110K. All right. I'm trying to change the settings here. What? All right, guys. Let's see if we break over 110 on Bitcoin. Okay. Is this better now? There we go. For you guys here, you're welcome. There's no like apply button though. That's the problem. That's all right. Oh, there you go. Now the mic is green. You're welcome here, guys. I changed this mic just for you. Look at the NASDAQ bounce exactly off of 23,000. Again, if you haven't already, check out Top Step. No PDT rule in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. Patterns are incredibly similar to blue chip stock patterns. No PDT rule in futures. If you want to learn to day trade, just do not fund your own account tens of thousands of dollars. It makes absolutely no sense to do it. Instead, try Top Step. They give you a 50K demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose the 50 bucks. Limited risk. I lost thousands of dollars when I first got started trading. If you pass it, you get a 90% split. Similar to funding your own account. If you fail, you're out 50 bucks. You also get to keep your first 10K. Prior to that split kicking in, no PDT rule in futures. Just incredibly useful. If you want to check it out, here's the link. Great way to help support the channel. They pay me money though. I am biased. Because of it, they're a sponsor of mine. I'm biased. Confirm everything with them. I can't guarantee anything. There's the link right there in chat. I'll pin it to the top of the page. So do you guys want me to trade futures or should I just close it down? What do you guys think? Should I trade a little bit here? I'm gonna try to trade some here. Hold on. Look at that 23,000 level, right on the chart. All right. I'm gonna buy this dip. I'm gonna keep adding down to 2310 as well, but I want a little bit larger size. You can see the good thing about Top Step X is you can trade micros, zero commission too. There we go. Don't chop right now. Don't do it to me. Am I in 5 contracts? How am I in 5 contracts? Oh well. I didn't want to take this big of size, but that's all right. Just get the balled up right here. Let's see if we just get balled up. All right, that's the last. That's the last I'm gonna add to this right now. There we go. I want this to just get balled up right here. There we go. I'm still waiting to see if this gets balled up. I think it might. There we go. It's got balled up a little bit. There we go. Yes, sir. All right. That's what I wanted. I thought it would get balled up here. 2 contracts left. I'm going to hold this break even. See if we can rip up, break that 25 level is what I want. You can see how similar this is to day trading stocks too. Incredibly similar to day trading stocks. Most pro day traders trade futures as well here. All right, we liquidated some of this, but we're pretty green now. Green is good. It's futures trading. This is futures trading right here. I don't know how you scalpers do it. I try to get myself into a position in which I could hold it like this, break even, cut. Still had ended very small green for the trade, right? But green nonetheless. And so we're out. I would say the Fed minutes report was slightly, I would say it was slightly dovish. See if I can buy this dip again. All right, we got 2 micros here. Let's see what happens. I hate it when this duck starts to like. Why is he quacking on my stream right now? We got this support level too, which is what I want to kind of buy into right now. I want to look for a good ad spot. Ad right here. All right, we're green. I don't like that drop. We cut most of this here. We're basically flat over the last few trades. We could also buy it in, but okay, that's better. Could be bouncing at that level. Previous high right here. I'm trying to hold this break even now on the rest, but small trades. And again, if you want to check out Top Step, this is where I'm trading. I'm trading on Top Step X. You get 0 commission, no PDT roll in futures. Beautiful way to learn how to trade. And if you're good enough, you can get started for a very small amount here. You can see how small I can trade with micros, and I can kind of scale in and scale out as well. We're green on the day, but we're not like really green. This looks good. It looks good. It's all right. I should have held it the whole time. I thought this would get bought up, but we're green nonetheless. Yeah. Again, FOMC report. We're gonna, if you want to follow us on x.com @beginnertrades, we're gonna break down like all of our research from today. We're gonna put it on x.com @beginnertrades in bullet point style, so you can kind of break down exactly what happened during today's FOMC minutes report. You can see kind of what happened, like what the Fed did, why they chose to do what they did, kind of bullet point breakdown style. Really easy. We're @beginnertrades is our X handle, @beginnertrades, and again, we're gonna post that right now. Yeah, we're posting this right now. Yep, so it's pretty big, but it's not that big, honestly. It's smaller than the FOMC minutes report. Let's put it that way. So if you want like a breakdown, look at that level here. So we drew this level, held beautifully. Report's already out. We already put it out. I'll see you guys later. I'm gonna get out of here. Y'all be good. Hey, have a great day. Be safe in this market. Remember, tomorrow we got jobless claims, unemployment filings. Jobless claims, unemployment filings. Jobless claims, unemployment filings live. 8:30 Eastern Standard Time tomorrow. We're going to stream it all live. We're going to trade live. Hit the subscribe button. Hit the notification bell. We appreciate it. Y'all have a great day. We'll see you guys next time. Be good.